Hello, everybody. Welcome back to Block Bytes. It's Monday, and it's time to take a look at the charts. And to do that, we have our own crypto trading guru, Vicky, with us. Vicky, welcome back. How are you?
Fine, sir. Welcome, sir.
All right. So we didn't do a session last week, but there's plenty to cover this week. So take it away, Vicky.
Yes. There are two things that we'll start with BTC first, actually. So, this is the band, this area, no? This is the band where we've been facing resistance for the past, 6 months here. And this was a crucial area. Why? Because after this breakdown here, this was actually kind of retesting that. If you could see here, it got rejected here, came back down.
Right.
So a lot of people thought that this was a bearish retest of this breakdown, and that Bitcoin was going to go down.
Okay.
But game changed 2 weeks before. We got a huge pump on Bitcoin that actually, took us above the bull market resistance. On a macro scale, if you look at on the macro scale, if you clearly look at it, this region was very important because this region here actually acted as a support in the earlier bull market. If you look at this one, it came down here. It is a support and then bounced back, which was also acting as a resistance here. We were trying to kind of break it. But now we have done that. So from a technical analysis point of view, we are right now in a bull market. That being said, if you look at other factors like the open interest, which is already at its all-time high. The open interest right now is same as it was here at this point.
Oh, okay.
At all time. So the open interest is right now very high. So that is one crucial thing. Also, if you look at the OBV, this is the OBV, sir.
What is the OPV?
OBV is basically the on balance volume. Which basically tells you, what the indicator does is it subtracts the buying volume and the selling volume.
Okay.
So if the price is rising, for example, the price is rising on a low buying volume, it means it is not a sustainable price action.
Okay.
And if the price is falling the inverse is also true. The price is falling on a lesser sell volume, it only means that the dump is not going to last forever. So this crucial aspect is important. This can also tell you whether the price is moving on illiquid market, how the price is moving on illiquid markets. If the market is very illiquid, with a simple buy orders, you can actually push the price up a lot.
Okay. So what does it tell you at the moment?
Yeah. So what we can see here is that the OBV, if you see the OBV, the buy volume has been coming down actually. If you look at this, if you look at the indicator, the buy volume is coming down. I put on a line actually. This yellow line tells you that the buy volume is actually down on the weekly. Whereas the price actually gone up from here to, the price has actually gone up from here to here. The price are actually gone up from here to here, whereas here the yellow line is kind of coming down actually.
Okay.
So this is something we call as a divergence.
Right.
That is the indicators actually on a downward trend, whereas the price is on an upward trend.
But it's still coming up. Although it is still in a range, but it's still creeping up a little bit, isn't it? In the end.
Which one, sir? The OBV indicator.
Yeah. The OPV.
Yeah, that is fine actually. As long as if the divergence are resolved, then there is no issue with that. But if they're not resolved, generally a problem. We are saying that there's a bounce here, right? But you look at it, the buying volume at this place was actually
more
higher, more than this, and yet the price was only around 30,000. But with now with little less buy volume, the price has gone up to 35,000.
Correct.
Now, this is not a sustainable price action, and suggests that this is probably a short covering rally. That is, the more people actually shorted this place, and to actually liquidate them, the price went up.
Okay, that makes sense.
Now, from a manipulative point of view, if you want to actually, if really we are in a bull market, this 30,000 should hold on the quarterly. Now, this is what we have got, sir. This is the resistance band, this area. We are right now sitting above that. Now, what is more important is that this has to be sustained at least till year end. That is, when this year end, this quarter is over, or when this year is over, 2020 is over, if we are actually sitting above 30,000, this region, we are definitely in a proper bull market. There's no doubt in that.
Okay.
Why? Question. We have situations in the past. So this could actually be a deviation, to attract longs or to attract bulls and get them liquidated next month or the month after that.
Okay.
Why I'm saying this? Because one reason is, as we have seen, that it's not a sustained rally. Not sustained. The buying volume is low, and it moved on low volumes. Second thing, open interest is very high. By open interest, I mean a lot of people have now opened long positions. Long positions, yes. When the balance is not right, actually, when more longs are there compared to shorts, obviously all of them cannot be paid. So price has to go down. Right. It has to be in a balance. The number of shorts should be equivalent to the number of long. The price can be actually sustained. But if one side is one is on the off side, the price tends to move in the opposite direction. And right now, longs are on the off side. Okay. Why? This is very important. Why? Because the deviation could just be because the deviation means a lot. For others who are not actually tracking the markets, they could think that this is actually Bitcoin has actually broken the resistance and we are heading into a bull market. Whereas the next month this will turn into a deviation. And and making them actually sell their positions. For example, let's say a few institutions bought at 35, thinking that they have entered a bull market. And when the price goes below 30, they will most likely sell. Right. And that further downward pressure on Bitcoin. Makes sense. Okay. Right. Actually, this is the second reason. The third reason is the Wyckoff distribution pattern that is kind of clearly seen. Of course, Wyckoff distribution can only be confirmed if the price goes below 30K. I'll come to what is Wyckoff distribution pattern at the end, sir. After I finish this, I'll come to the Wyckoff distribution pattern. Okay. At the end. Right now, you remember the structure actually. You can see the structure. If the same structure would be available in the Wyckoff distribution pattern, I'll come to the distribution pattern. You could see that this area is there now, sir. This area, this monthly close. Okay. Below this line, I mean. Yeah, below this line. Yeah. This one is something called as the sign of weakness. Basically, sign of weakness. This is part of the Wyckoff distribution pattern that we are going to. I'll explain later. But for now, we can remember that this region you can remember, and this big upthrust you can remember. This big upthrust, this candle. Gotcha. If you remember these two, I'll be able to tell you what is a Wyckoff distribution pattern. Okay. Now, one thing is very important. For the next 2 months, if the price stays above 30K, then make no mistake, we are in a bull market. Can I ask you a question here? Yes, sir. Why do you want, I mean, what's the rationale of choosing 2 months or 1 quarter? Yeah, that is, there is no rationality in that. It only means in the higher time frames, if a price closes above particular resistance, it gives more validity to it. Fair. Okay. I see. Okay. Yeah. So Yeah, right now on the monthly, we have definitely close to about 30.
Right.
So like right now, the probability of being in a bull market is, say, for example, 40%. If we finish the quarter, which also turns out to be the year end, if we close to 30K, that gives it a probability of 80%. It's all about a matter of probabilities. The more higher time frame we go in, the higher probability that it actually, is a pattern playing out.
Okay, makes sense. All right.
On the monthly, we are technically in a bull market on the monthly. But what if the quarterly closes below? That is a key question.
Okay.
So it's only a matter of probability. And right now, the probability favors being in a bull market. But like we mentioned that the OBV falling OBV, as well as the ramped up open interest, that is more longs right now being sitting on there, as well as the fact that it was a short squeeze. Short squeeze in the sense, we already discussed that more shorts were opened at these positions, at this area around 28K. So to liquidate them, the price immediately shot up, giving them no time to exit the positions. One thing is very important, sir. When what happens is, let's assume people shorted here at 28K or 27K. Now, what is a short squeeze is basically, let us assume when they short actually, where they're selling Bitcoin in the market, right? They're borrowing Bitcoin and then they're selling it off. That is a short position.
Right.
The thing is, later, let's say, for example, from 28K to the price comes to say 20K. Now, this profit margin, they are borrowed at 28K. Sorry, they are borrowed, say, 1 BTC at 28K. Let's assume they have to return it after 2 months. I'm saying it in the very simplest form, actually. In perpetual trading, this will differ. This difference, and it's kind of complex, but the same idea remains. If someone is shorting, they'll borrow Bitcoin. Let's assume I borrowed 1 Bitcoin at 28K. I borrowed 28K, and I have to pay back that 1 Bitcoin, say after 2 months. Now, the Bitcoin after 2 months, if the price of Bitcoin say reaches 20K, I simply have to buy at 20K and give him back the Bitcoin, borrowed Bitcoin. So I'm pocketing that 8K difference.
Right.
You get this, sir?
Right.
Yeah. Now what happens is, this is when the price moves down. But when the price starts moving up, what happens is the guy will be, whoever is open short position, whoever has borrowed the Bitcoin will be panicking because he has to buy it at a higher price after 2 months. So what it does is actually he exits the position. That is, he doesn't want to buy at 35K. So let us assume the price, as soon as the price reaches 30K, he immediately buys it for 30K and pays back the 1 BTC. Now he is facing a loss of 2K.
Right.
Now the question is, when he buys Bitcoin at a loss, that is at 30K, say, for example, it actually moves the price up. So what happens, like more, this is called short covering. The more short squeeze, the more people that close the shorts, the more the price will go up. Because when you're closing a short, you're actually buying back the Bitcoin.
Correct.
So that is what has happened.
Okay.
That is what has happened in the sense, that is what has happened, like based on a lot of data. Now, I've given these 3 reasons. So one is open interest ramp up, the OBV, and of course the short squeeze of it. And third, the WOV distribution pattern.
Okay.
Now, we can go to ETH chart.
Yeah.
And afterwards, ETHBTC, and then we'll go to WOV distribution at the end.
All right.
ETH, right now, we are sitting at a crucial point. Yes, sir. So, ETH, right now we are sitting here. Yes, sir. So, for Ethereum also, this line here, you can see, no, sir, it's a crucial resistance.
Right.
And it seems right now we are in control of that resistance. We're kind of sitting above that resistance. We have to see how this plays out. There is a chance that Ethereum could go as high to fill this wick. This wick you are seeing it here, no, sir?
Can go
Fill
up to
this
that
wick.
levels. Yep.
It could fill this wick here, or it go as high as 1870 or 73.
All right.
Thing is, it could also even go up to 2000.
Okay.
There are chances. But again, like we discussed, even on Ethereum, the buy volume is actually very low. So yeah, the only we have to see how Ethereum for Bitcoin as far as Bitcoin is concerned, I think we have found a temporary local top, which means that around 36K probably corrects. From 36K it probably corrects. But for Ethereum, right now, this week closing is very important. Why? Because it has closed above this line. And right now it is in a kind of a healthy trend. So whether it is going to 2000 to close this wick here, or it is going to, get consolidated or distributed here, can only be known on the weekend. But one thing is sure, this week, there's not going to be any dump. Why? Because the other alt tokens like Arbitrum, Matic, these are very, are in a very good set. They have very good setups for a small pump.
Okay.
So since they are in a very good setup, we can assume that this week Ethereum is not good. Like this week, nothing is probably going to happen to Ethereum. Probably might not dump.
Okay, I have a question here, Vicky.
Yes, sir.
Now, there is a common belief that the crypto market follows a cycle. That is, Bitcoin goes up first, followed by Ethereum, then followed by alts. And then
Yes,
in the reverse also, the alts, Bitcoin goes first, goes down first, then Ethereum goes down, and the alts go down after that. So how much does that actually play out? Do you see any deviation happening right now, or it is going to play out the same? The reason why I ask this is because if alts are making a good position to jump up, could it be like a deviation from this pattern?
There are two things actually. The standard pattern that is usually being spread out on X is this: first Bitcoin goes up, then the money flows to Ethereum,
right,
which is second biggest alt token.
correct.
I mean, sorry, the second coin or token by market cap. Then from Ethereum, which is the Ethereum is like a leading indicator for alt tokens. If Ethereum is performing, then at some point the alt tokens are going to perform.
Correct.
So what the money flow is, after flowing into Ethereum, it will flow into large caps. Then from large caps, it flows into mid caps, or mid caps to small caps and micro caps. This is the pattern that is always being told. But even last week, there was a deviation. Okay. Last week, the entire narrative was mid cap tokens like Fetch or Injective protocol. We even discussed this in the crypto bubbles.
Right.
Fetch, Crypto Mina protocol. These are all mid caps that pumped last week. And this week, large caps are aligned to pump. Like Arbitrum, Matic, even Doge, Bitcoin Cash, BNB. So these are aligned for a pump this week. So clearly you could see that the money was not coming from actually the money didn't go from large cap to mid cap. It actually is coming from mid cap to large cap. So this thing that they are telling us, sir, it kind of maybe works in an ideal market condition.
Right.
Right now, the market is very illiquid, and the market makers decide which ones.
Right.
So I think that logic flow should not be taken seriously. But one thing is sure: when Bitcoin is pumping, it obviously, when it corrects, Bitcoin dominance increases, and when the Bitcoin dominance corrects, all tokens pump. The order, whether large caps are going to pump, the mid caps are going to pump, is not kind of certain in every situation. Depends.
Makes sense. All right, got it.
But one thing, when Bitcoin pumps, the Bitcoin dominance rises. And
Hmm.
when Bitcoin dominance corrects, which means the Bitcoin dominance falls, obviously the money is
Everything
going
else
to the
will
all tokens. Yeah.
Right, got it. Okay.
So if you look at Ethereum, I personally, my belief is that though this kind of looks bullish here, I think that this will probably consolidate or get distributed here, and then crash in the sense like come back to our accumulation zone, like we have been discussing for the past few months.
Right.
This accumulation zone is where Ethereum is probably going to come, and from here it will go to somewhere in this region or the golden pocket region before the AEP 484 for upgrade. So for Ethereum chart, nothing has changed fundamentally.
Right.
But as in Bitcoin chart, if you could see, it put in a huge pump.
Yeah, and that was like a weird black swan. Nobody could have.
Yeah. Like a weird black swan on the reverse.
Yeah, exactly. A white swan, maybe, but whatever. Yeah.
The reason why I'm saying that Ethereum will probably collapse is because, contrary to what I was saying earlier, that ETHBTC will most likely hold, ETHBTC has collapsed, which is very bad for Ethereum.
Okay.
So if you look at it, I'll go to the ETHBTC chart. Very clear. The collapse is very clear, actually. Yes, sir. So as you could see here, this is a monthly chart on ETHBTC. This line was supposed to hold. This line here, the 583.2 you're seeing now, sir. First line, the first white line. This was the major support, major support. This should have been held, but now this has been breached, and we are kind of on the path to collapse. Now there are two things that can actually play out. One thing is that next month beginning, we could retest the second white line here, and then crash straight away, or maybe if there is like any good news or this thing, this could actually retest this point, this 583.2 point, this first white line.
Got it.
So two scenarios can play out. If this is retesting the second white line, that is this immediate resistance, then we can be assured that we probably will be crashing at the beginning of November. But if Ethereum BTC decides to retest this point, then we probably reach 2000 on Ethereum. Okay. In fact, the numbers actually tally. Right now, 1850 Ethereum is at around 1820, sir. If it is retesting this line, it is 1850 for Ethereum. And if it is retesting this line, the first one, the target is 2000. Okay. So honestly, I don't know which one will it retest. But like if you ask me, I think it will retest this white line and then immediately go for a crash. Why? Because Bitcoin is putting in a local top. It's very clear that Bitcoin is kind of putting in a local top.
Very strong. Yeah.
So if Bitcoin is going to dump, there is no way Ethereum is going to hold it, considering that this chart is so bad.
Right.
So a small retest into the next month beginning, and then a crash is what I'm expecting. Like open interest is very, very, very important indicator. Probably I'll discuss next week. I'll open the open interest chart and then show you how open interest has clearly predicted the top as well as the bottom.
Got it. Okay.
So now we'll go to the WOV distribution pattern that I was telling you, sir. So this is the Bitcoin chart on the monthly. Fine, sir?
Yes.
Yes. This is the WOV distribution pattern. Okay. You could clearly see also, this and Bitcoin chart are very identical.
Except for that big green one in the beginning.
This uptrend is it?
Except for the big green pump
Yeah, that's what. The big green pump is this one, the upthrust after distribution.
Oh, okay.
There are the 2 points to be noted here.
I see.
We have 3 peaks actually, each in increasing order. First one is the BC that you could see here. BC, the top left one.
Okay.
And there was an upthrust, small upthrust that is closed a little above that. And then a minus sign of weakness. The minus sign of weakness was what I told you in the beginning of the video.
Correct.
The bottom, it was the bottom. And now from there, it put in a big upthrust after distribution. The third huge pump was the upthrust after distribution. So Wyckoff distribution basically tells you that a lot of BTC has been distributed slowly in a coordinated manner that it's kind of difficult to predict. On-chain sense, very difficult from the order books, but the pattern reveals that it has been distributed. Of course, like all other technical analysis indicators and patterns, this also has its own probability of playing out.
Of course, yeah.
But personally, I am very convinced that this is the pattern that is being played out.
Right. And of course, as you said, the volumes are not helping either. So,
I think the entire retail or the entire newbie or gullible are cleverly played by the backlog narrative and are being pushed into thinking that we are in a bull market. But actually, it's not.
Yeah, you know what? I am guilty of that feeling. Every single day when I wake up, I feel that, you know what, I should buy some more. I should buy some more. But I don't. So, you know what? Sometimes it's good that you don't have money, that you actually end up making some good decisions there. So,
yeah. Of course, we are all in this for making money. And even if you don't make money, like it doesn't matter a lot, in my opinion. But of course, understanding, and I think the crypto market somehow, rewards people who stay in the game.
Yes, that is, I'm good at that. I can't do anything besides that. So everything else is too fancy for me.
Who are staying in the game long term.
Yeah.
And one more thing is important is right now it's not a place to FOMO and buy. But I think I've seen many people right now doing that because they're thinking that we are in a bull market and probably missed the buying the bottom or close to the bottom. Correct. But I'm very convinced right now we are not. This is not just from a technical analysis point of view, like we discussed in the yield curve thing also, Nozer. The yield curve is on the verge of disinversion, which means it will put in a shock across markets. Right now, NASDAQ is actually crashing. NASDAQ and SPX is crashing. Correct. So why someone saying Bitcoin is decorrelated? No, I don't think so. Bitcoin is not decorrelated. Bitcoin is like right now, Bitcoin is kind of going through a distributive phase where Bitcoin is being sold at a constant rate. And once the selling is done, it will crash. What is more important is that despite this fact, Bitcoin will take some time. I mean, will kind of slow bleed or kind of crash will be extended to the next 5 to 6 months. Whereas just before the halving only is where we bottom, in my opinion. Whereas Ethereum, that is the problem. Ethereum is going to, in my opinion, see a lot of downside compared to Bitcoin for 2 reasons. One is the Ethereum BTC chart has collapsed, and the second reason is Bitcoin dominance is we're putting in a highs after highs.
Okay. All right. I think that's the main takeaway from this session. Don't FOMO.
Yes, sir.
Yeah. Don't fall into the FOMO narrative. So yeah. All right. Thanks a lot, Vicky. This was another enlightening session from you. A lot of good points have come across, and I'm sure the viewers will make the most out of it. So till next time, till next Monday, we'll meet again and with another session of the weekly technical analysis. Till then, bye-bye, everybody.
Bye-bye.